Hello friends, welcome back to my channel. Please like, subscribe and also hit the bell icon. Today's topic is about KSE Ltd. So it's a Kerala based company. So they are producer of actually the mainly the cattle feed and also other milk products like paneer as well as ice cream and other products. So why I'm recommending this? Actually it is high ROE, means return on equity is more, and return on capital employed, that is also more. It's 44 and 34%. This is really very good, and also it is undervalued compared to peers, which you can check it in further slides. And also it is debt free, and also the PEG ratio is also less. Actually it should be less than 1. So this is also at the rightly valued, and considering the PE value, this is really undervalued business. Let's quickly start. So the company is actually, as I said, it's a Kerala based company. So it's I mean mainly into cattle feed, and undertakes solvent extraction. I'm not sure what exactly is this, but however it also operates, as I said, milk procurement processing, and also it has got some milk products as well. As you can see here, ice cream. The brand called Vesta. Actually, it is one of the good growing brand. They are also creating a good image like Amul in that too in Kerala and Tamil Nadu, and also they are planning to extend it to other parts of India as well. So mainly cattle feed. These are all the brands. I don't want to go into details. So just go through these. And next, in terms of some of the key parameters, why I'm recommending is the price is 2210. I mean, compared to its all-time high, it was actually almost like 4,000. But however, even if you consider 52-week uh, price range, I think it is 2990 was the uh, 52-week high. From there, it has already come down as well as I think it has also gone up from 52-week low. So what I like this here, P ratio is 7.91. If you quickly go through the peer competition, peer comparison, so you can see the P values of other companies. Nothing is trading actually less than 10, but this company is really undervalued. Because of their margin fluctuation, currently it is trading at a very low value. As I'm a value investor, so I thought of recommending this company. Please, if you, and also before investing, always take your financial advisor help. Yeah. So another thing is actually they are also paying dividend, but this year they already declared 50 rupees dividend, which will be paid after the AGM. So as I said, ROCE and ROE are really good. Face value is also 10. Promoter holding is less, but however, I think another party positive news is also, I think Godrej company, few shareholders are also there, almost 5-6% they're holding. And the industry PS is, as I said, 22. 22 into EPS we multiply. So even if you give 20, the price should be actually almost like how much? 285 into 2. Even if you consider 300 into 20 means it should be 6,000. But anyway, I think that will not come so easily. But even if it becomes double from here, it's also a good bet because it's undervalued. Number of shares is, this is really good. Even if you see here, it's only 3 crore shares. That's also another positive news. It could be also negative, if the, in cases of people start selling, then there could be liquidity issue. However, I think promoter is holding very less. That's why I think you should not find the liquidity issue, the upper circuit and lower circuit, that kind of issue. And another good thing is also it is no market to compared to market to sales value. It is not high. It's only 0.43% percentage compared to the sales what. If you see the competitors, I think they are doing they are trading at more level. Where is market to sales value? Is there a value here somewhere? Market cap, market, I can see here. So compared to others, at least some companies are still trading less than 1. But however, I think this is also undervalued actually. So this is the peer comparison. I don't want to go into details. As you see, I think the P value is less. In terms of sales, I think it is increasing, but it is actually not showing, not growing so good. If you see here, only 6% it has grown. But however, there is also one positive news, which I'll show you in the later. The number of dealers they've increased from this year onwards, almost doubled from 700. You can see here, I think in the description it was given. So they've got a 700 dealers. This was the last year's data. If you see this year's data, just few days back, there was actually CRISIL rating was there. From if you see that report, they are almost double 1,300. This is also one reason why I'm saying this can get re-rated. Just to come back now, as you see, sales growth is not good. However, the profit growth is really good. If you 5 years, if you see 36% they increased. Stock price also not done much, and the return on equity is really good. But balance sheet, if you see also, I think equity capital, as I said, it is only 3 crores, and it is cash rich company. They've got 294 crores of reserves, including they've also invested in mutual fund, almost like 162 crores they've invested in mutual funds. As I was saying, I think promoter keep on selling it, uh, but the promoter holding is also very less. If you see here, only 23% is there, and Godrej Agrovet, as well as Godrej Industries and Nadir Godrej actually is also entered into this stock. They are holding almost like 6%. Now let's come back to the positives and reasons why I'm saying which can these can get re-rated. So they've recently announced actually here for a split of 1 to 10, and also they proposed 50 rupees as the final dividend. So these are all, as I said, I think these are all the good reasons. That is one. Actually, they're splitting. The price will reduce from 2,200 if they split it. Currently, if you see also, it will become 220. Then it will be affordable for more buyers, and that's why I think it can also keep going up. As I said, EPS is also there. These are all the positives. And the Godrej family is also invested. If you go through the Godrej Agrovet uh, presentation or their con call, they also mentioned that they can acquire additional stake as well based on the right time. Maybe this KSE company could be also a takeover candidate in the long run, but we don't know. I think this is just a speculation. They're also actually saying they will also enter it into new territories, new geographies. I think this is the latest AGM related report. So they are also thinking of including innovative products and also diversifying products. Okay, southern. Okay, here they said they already increased it to southern part, but they would also, at least for the cattle feed, and they also in 3 years the time they're also thinking of expanding it to the northern India as well. So as I said, this is from the report from the CRISIL ratings report. So it is debt is zero. So they have also invested I think 162 crores in the mutual fund industry, and 96 crores is there in the cash as on last financial year. And it's also as I said, 700 dealers. They have almost doubled. Now it is 1,300 dealers are there. This is a kind of a leader. And another good thing is this company also exists from 1963. It's not like a small company, sorry, recent company where you can think of risk of getting delisted and all. No, it's not so. This company exists from long time. However, take with a pinch of salt. This low promoter holding is one of the risk, and there is no pricing power actually. As you see, the cattle feed usually has got a always there is a government, state government, this involvement is there. So that's also not good news. And also profit swings based on this raw material prices. They use a lot of this maize, oil, and other things for the cattle feed. So if the prices of these raw materials go up, I think their margins will come down. And also this is a small company. In the small cap, always you should be very careful. You should not invest much. You should maybe invest only just like 5% of the capital. And also if you're accumulating, you accumulate in three or five chunks, so that you don't invest at one price, and if the price comes down, then you should not feel bad for that. That's why it's always good. I mean, in the small caps, it's also averaging up is also one of the strategy. And as I said, the low sales growth, I think this is also one of the risk. So overall, if I come back here to the price from 10 years, I think it has not done much. If you see here, the price was already in 2018 itself, the price was almost 3,700. From there, actually, it was just consolidating. Recently, only the volumes have started going up. If I just go through 1 month view, so if you see the, I mean, it is also crossed 50-day moving average as well as 200-day moving average price. No, this is not working, but it doesn't matter. Yeah, it is. I think volume is also started going up. So I feel this is the right time to pick it up. But however, you have to be, okay, now it has come back. If you see the volumes, it is going up, and if you see 200-day moving average as well as 50-day moving average price, it is increased, and delivery volume is also good actually in current few days. So if you are looking for undervalued stock, I would recommend you to think of buying it after your analysis. So as you can see, is also here. I think as I was saying, the margin is fluctuating. So nowadays, I think the margin is getting better. Maybe because of the raw materials, the prices have come down, I think. So however, I think the sales should go up now onwards because they also increase the dealers and all. It's a cash rich company. uh, yeah, that's it, I guess. If there are any comments, you can also write it there so that I can research and give it back to you. And also, if you have any additional information about this company, please comment it out so that it's also useful for other investors as well. So yeah, that's it for now. Thank you so much. Bye.